Alrighty. Alrighty, guys. I am working on a little surprise. Until people get in here on the live stream, we'll give everyone a minute. What's happening? Welcome in. Just waiting on a few people. Give them a minute to get here. Did you have covered calls on anything? What's going on, Pat? I saw your question. We're going to go over it. Just letting a few more people load in. Nice. Nice job with the covered calls. So as you can see, I'm kind of working on something as well in the background, trying to have access to a nice calculator that kind of spells out the scenarios also. Like, I'll just plug one in actually so you guys can see it. Just real quick. Stock price. Let's just say it's SoFi, so it's like 16.22. You want to buy it for 15. The premium is $1. One contract, May 15th, 2026. So there's your risk assessment. Here's your trade summary. You're selling one cash secured put at a $15 strike. Your premium, the total premium you'll collect. Profit if expires worthless. If assigned, you'll own it for this. Stock must be above $14 to truly profit. And then here's the if stock's above 15, if the stock is below 15, what happens? So, and then everything else you want to know. So, working on that. Yeah, I didn't think the war is going to stop easily either. I agree. We've still got one more leg down, one more surprise. So, I'm glad that we did our covered calls on the ones we did. Iran, Nibius, and Oscar. I have the Iran and Oscars, and then I have ciphers. So, definitely going to be, I think this is going to be kind of like the final dip to kind of accumulate as much as you want before we either take action in the war and the war ends, an agreement actually does come into play and the war ends. Earnings is starting to come out, so like I think this is going to be kind of our final week maybe of gathering. We'll see, but alrighty, I guess it's just going to be YouTube for now. So we're just going to go ahead and get started. We can go over pretty much whatever you guys want to go over. Pat, I know you had a question in the student request section. Thank you for that. Have you gone through any of the classroom stuff yet, Pat? I don't know if Pat has the capability of typing or not. But there's a little chat room, Pat, I don't know if you know about that, but alrighty. Maybe you can't chat, so I'm just going to go ahead and show you. So inside of the Discord, right below where you put your student request in of questions, okay, there's a classroom. And then if you scroll down to cash positions right here, okay, this is kind of how we determine how much cash. Now, it's not like the second the VIX touches, you know, the second it touches 15, I need to be 25% cash. No. But as soon as it is 15 and your targets are hitting, or your stocks are hitting their targets, then you want to start thinking about maybe that position I should start selling some so I can get some of my cash position up. So I do have a VIX cash position note card right there for you. And then the second part of your question was, do we include any covered call positions not closed into equation? I wouldn't. You just mean as far as like if I have this Iran covered call and I should be, I need these shares to actually be like called away in order for my cash position to be met. I wouldn't, unless it's like this Friday, within a week, and it's most likely going to get called away. Sure. But if I'm thinking like May 15th, this covered call and the shares get called away, I wouldn't, because there's so much time. There's 30 days still left. So I wouldn't count on those shares being, sorry, those shares being called away to get to your cash position amount. So I wouldn't bank on that. Okay. Dog had a question as well. Student requests. When doing a CSP or covered call, how do we decide what date to pick? What are you looking for in the charts to help decide? So I'm not really looking at the charts to help me pick an expiration date. I am looking at really the calendar. So if I go to just any, not Doffy, I don't know, that's not a stock at this moment. SoFi. Okay, we're gonna go to trade SoFi options. Okay, and dates. So I like 45 days or less. 60 is the max. And I'm talking about just starting the position. I'm not talking about rolls or anything like that. I'm just saying starting the position, right? I like 45 days or less, and I like the third Friday of every month because third Friday of every month has tighter spreads. Which spreads are, see this bid, right? This is the bottom of what you can get for premium, and this is the top. This is only a 4-cent spread. That's a very tight spread, which is good. Now, if I go to maybe May 22nd, SoFi is going to be a bad example. I think they're pretty much always tight. But here's an 18-cent spread for just the following week. It's just a bigger spread. There's less range, or there's more range, so you can actually kind of get messed up in the premiums because, people are kind of selling and buying in a wide range instead of it being like truly accurate of what that is kind of going for. So we like tighter spreads. We like the third Friday of every month. It typically also has the most open interest and volume activity on those options, which is easier for you to liquidate and get shares picked up and everything. So third Friday of every month. It's called the monthlies, not the weeklies. So April 17th, May 15th, June 18th, July 17th, August 21st, September 18th, October 16th. So there's only really, these are monthly, so there's only 12 dates I'm going to trade all year. Okay. Now, do I randomly do a weekly expiration date? Yeah, it's not the end all be all rule, but when I'm initially looking to make a trade, I'm looking at those calendar dates. So May 15th is ending right at that 33 days, so that's exactly, I'm still doing those until this gets to about this like 2 weeks away, kind of under 2 weeks, like this. This would be like the lowest I would go. This May 1st. And then 60 would be my max, so I wouldn't go further than June 18th, really. But I would really have to be sure. I don't know if you And that's how I just pick my expiration. It has nothing to do with the chart itself. Okay. Expiration date also helps you pick your strike. So May 15th, 33 delta. So I'd be looking at about $18 covered calls. To be a little bit more risky, to be a little bit more safe, you'd be looking more at like a $20 covered call on SoFi, because the delta. Now, Ella, did you know? I'm kind of looking into this more, that we can set covered calls for multiple dates, multiple strikes, all at once. I'm looking into it more, trying to understand the strategy behind it. Um, what stock do you have more than like 100 shares? Is it? I'll just look at whatever one. Hey, Pat's typing. What's going on, Pat? Ask questions. This is your guys' time to truly get ahead, because everyone else, I guess, didn't want to come in today. What's going on? I'm glad you made it. Did you hear my explanation, Pat, of the cash position? Or did you just get here? I can do SoFi too, Ella, if you want me to. Okay. So let's just say May 15th is the first one. Of course. If you have more questions, just drop them in there. Um, so I can answer questions. I figured we were gonna have the live stream, so if you were gonna be on here, I was gonna answer the question. If you weren't, I was gonna make like a little note to you. So let's say May 15th is the first one. So let's say you have 500 shares of SoFi, okay, and you don't want to sell them all at once. So you're like, okay, I'm willing to sell 100 at, oops, not buy. Marathon, BMNR, and SoFi. I can't cover call right now. Yeah, I'll go over those actually. To Harry, you made it. So we can say May 15th, I want to sell SoFi. Okay. Where is it? So let's just go with, it doesn't really matter because we're not doing it right now, but let's just say we pick this strike for May 15th. Okay. So I'm selling that one. Okay. And then let's go to the next monthly, June 18th. And let's go to 20. Okay. And then let's go to July. Okay. Let's keep going to 30 deltas. 26, 20. So there's not a huge bump. There's just more premium. So you can see that you kind of just see what your strikes and your premiums are. So I don't want to sell more for 20. I kind of want to get a higher price. So I'd go to 21. I got 5, right? So August. 21. We can go to 22. We got one more share, one more set of 100 shares to sell. It's not going to let me pick that. Oh, maybe I can only do 4. I can only do 4. Okay, so let's just say we have 400. Okay, so all this is going to do is say, okay, you're going to sell. Okay, if I do one contract, it's going to do one contract for each expiration date. So if I go back, it's going to sell 100 shares if this gets called away, right? If it's above 18 on this date, it'll call away 100 of those shares. Then if it's over 20 by this date, it'll sell another 100 shares. If it's over 21 on this date, but if it's not, right? If it's under 18 on this date, you're going to keep 100 shares, and then maybe you're going to sell 100 on this date. Okay, maybe that doesn't happen, right? So you can just set them up in advance like that. It's kind of crazy. I have to explore. Mid price. Mine are set for mid price automatically. Yeah, if you have Robinhood, you can change that by going to the option chain, clicking on the price tab up top, and changing it to mark price, which is going to default as the midpoint, versus the natural price, which is going to be the worst case scenario for you. So don't do that. Okay. Always default to mid, and then try to get more if you can. But yeah, this just allows you to set it up so you can just walk away from it for months and just see what kind of happens and just kind of lay out the groundwork for your shares. I don't think it's more profitable, but it is less um, required thinking. I don't know what a roll is like though. I have not done one of these yet. I'm doing more digging into it, but there is a way to just set them and forget them about months in advance. So it's kind of interesting. Some are going to get called away and some aren't going to get called away. I can't imagine unless you go 4 for 4, but that'd be pretty crazy. But I don't think it's more profitable. What's going on, AK? That's a good question about SoFi. You know what's kind of crazy? I have 10% cash still, and I almost just want to put it all in SoFi and stop thinking about any other company. Not any other company. I still have the other companies I currently hold, but stop thinking about buying any more companies because I'm confident that SoFi in a year from now or less than a year from now is up at least double. It's like one company I'm not stressed about on the world economy. They're not going bankrupt. They don't have a bunch of brick and mortar banks. They don't have a bunch of employees sitting in offices wasting their money. Um, they have Noto, who clearly seems to have a grip on how to run a company. He's very, very, very good CEO. I don't know. I don't have stress about the company. Where like Iran Cipher, it's like I'm not worried about it, but the volatility can scare you, right? Company can swing from 40 to 20 to 80. Like you're gonna like shit your pants some days and then you're gonna be like grinning with a big ass smile the other day. Um, I just don't get that way with SoFi. It's just like I'm not worried about it. So it's kind of interesting. Um, yeah, that's what I'm trying to have the dilemma with myself right now. I wouldn't go into margin to do it or anything like that. I would like Jake is a great investor, guys, but there is definitely some risk management. But he got to where he was today because of the risks he took. So I don't know if you guys know Jake on X, but and we can go over questions. Harry, if you got questions, AK, if you got questions, um, Marathon though. Okay. Anything Marathon's kind of switching to data centers, so which is awesome for them. But anything tied to crypto, just expect tomorrow is gonna not be very good. If crypto's still dumping, I don't know. Yeah, still going down. Yeah, CSP plays. So do you okay, this is what I do in the morning, guys. Okay. This is what I do every morning. Okay. I go to my watch list. Okay, and I thumb through it. Okay, make sure you have the Bollinger Bands on. Okay. Now, if you want to know worst case scenario as far as like Bollinger Bands, right? You look at the weekly time frame. Okay. As you guys saw, Nibius was overextended. Probably a good time to start setting some covered calls. I think it's going to go higher in the long term. I'm not worried about that, right? It's going to go probably 200 probably this year, but you're clearly overextended. But what I do in the morning, okay, is go to my daily time frame, okay, turn on this moving average because this lets me know really where's like my risk reward, how low can we go, okay? And I want to know that answer. And I'm just showing you what I do every morning to know CSP plays or covered call plays, right? I just look at that. So this lets me know, yeah, the 200 weighted weekly moving average. Yep. It lets me know really the kind of worst case scenario for a lot of companies. For example, when people were buying SoFi, right? Well, the 200 weekly weighted moving average was way down here, and I wasn't too interested up here. Everyone's like, it's going to 45. I'm like, it's gone a lot. I don't know if it's going to make it. Like, look at the downside potential. And sure enough, we've come down and we've hit that. So 200 weighted weekly is a very good one to know your risk reward. And if you're buying something truly extended from there, you might want to just leave it alone. Okay. So let's go through what I do in the morning. I wake up. Okay. We're at the bottom of the Bollinger Band. We're below the weekly weighted moving average. Probably a good CSP moment. Okay. Bottom band, red day. I want to own the company. 3 questions. Ask yourself, bottom of the band, is it a red day? Do I want to own it? Yes. To all 3, CSP. Okay. Just thumb through them. OSS. Okay. I see it's at the bottom of the band. Red day. But look at where your 200 weekly is. Right? So understand that it can drop a significant amount. Okay? So maybe if you wanted to own it, maybe don't go so heavy on the CSPs right now until you kind of see if it gets to this opportunity. Okay? This is just my mindset in the morning when I wake up. I just thumb through these. Okay? Below the 200 weekly weighted, bottom of the band, red day, CSP. Okay? Path, probably the same thing, right? Bottom of the band, well below all these, just because it's been on a bad time in the market over the years. But if you want to own path, bottom of the band, well below your 200 weeklies, CSPs. Okay. So I literally just thumb through like this. And then if we get to the, like here, right? Top of the band, clearly far away from moving averages. Okay. Probably a good time to start thinking about some covered calls. Right? IRN. Okay. We're at the middle. So I'd want to wait for red days, get closer to this bottom band, and then start thinking about some CSPs somewhere at like 28. Okay. We still stick to the 30 delta to find the strikes and everything like that, but the bands help you understand when you're close to a bottom point more than you are close to a top point. Yeah, the blue one is our bull bear line. Yep. And then the red one is the 200 weekly weighted moving average. Cypher. Probably thinking covered calls. That's why we bought some, and then we went ahead and set the covered calls right away. Because this can squeeze. The bands can spread, right? But I wanted to make sure that if we caught some, we'd catch the upside right at this resistance level, right? And then we can go ahead. If it goes down, back down to these 12, 13 ranges. Like I said, when I bought Friday and set the covered call, I knew that I wanted to buy more if we got the opportunity next week, so I didn't buy my whole position in one turn. But my covered call, I think, was $1.16. Oops. So, geez Louise, 16.81 minus $1.16. So I bought it for $15.65 because I bought it, set a covered call. My premium will knock my cost basis down to $15.65. So I'm good with my first position being there. Yep. Guys, I'm not greedy when it comes to the market. Look, if you buy shares, guys, think about this, okay? I bought shares, set a covered call for 20, which was I think the 30 delta, okay? To 20. I'm okay making a 21% return in 30 days because May 15th, 33 days. Also, we didn't just make that 21%. We also, okay, go to our premium, Cypher, covered call, the premium still makes me $6.9%. So 6.9 plus your $21.4. So we're making 28.3. So a 28.3% return in 30 days. I'm okay if that gets called away right away, right? That's a quick play being made. So like people get so caught up in the FOMO, like, oh my God, I might miss out. Well, there's another play to be made. There's also rolling, and there's also buying more shares. Okay. Like you set your covered call with your premium, go ahead and use that premium you just got and buy more shares. Then if it does roll or keep going past, you have those new shares you just bought that are catching the more upside. Okay, so for CSPs, so it's CSPs and covered calls. Um, I like to use the daily and weekly time frames together, right? Weekly just helps me understand the bigger picture. So for example, Cipher, right? If we look at the weekly time frame, okay, the top of the band is 21. I knew that. Okay. I saw that it's 21. I see, okay, yeah, it can go to 20, basically 20, $21 to hit the top of the weekly band. So what's my strike? 20. So there's a chance it gets called away, but it's a margin of like 80 cents, 90 cents, which I'm collecting like $1.16. So really I'll be selling it for 21.16, which is past the top of the band. Okay. So I like to use the weekly to understand kind of like the bigger picture moves because the daily bands can get tight, right? This is only a 12 to 16, and the weekly band is 12 to 20. Okay. So there's clearly more upside when we're at the bottom half of this band on the weekly than what the daily is showing me. So because the daily can squeeze, when this daily squeezes, guys, there's a move coming. See how this is getting the wider? Tighter, tighter, tighter. We break up. See, this is getting tighter and tighter and tighter and tighter. We're probably going to make that move to 20, which is where all this resistance kind of is. It's going to follow Nibius, and then IRN's going to follow. It's all going to follow. Does that make sense, AK, on why I look at both? Yeah. Use the weekly just as a guide to understand your risk reward, and then you can go back to the daily time frame. But I always want to understand where my risk is to understand whether or not I want to make that play. Okay. So, like I said, IRN can go to 20. Here's your 200 weekly weighted moving average. It's not out of the picture, guys. Right? Cipher could go to 8. I don't think that happens, but it could, right? Same way people didn't think TE was going to get down this low when it was up here at $10, and then it's like, well, this is at 350, right? So, I go through this every morning. I just see where they are on the daily band. Are they at the bottom, at the top, right? If they're at the bottom, I need to look where's the downside, okay? So if we have red on TE tomorrow, probably looking to do a CSP. Okay? We got the diamond to buy. We're not out of the war woods yet, right? So I'm not really, again, if I'm doing the outright buys, I'm really waiting on the weekly for me. Like right now with the war and uncertainty. If we are going to go ahead and try to make any sort of plays, I am looking at CSPs. Cypher got a weekly diamond, so I needed to buy some. And then I set a covered call to lower my cost average to reduce my risk. Still money to be made. Cypher long term, not stressed, right? We always think keep the long term mindset so we don't get stressed out about the short term news. I believe Cypher over the next year, if it takes 12 months, it takes 12 months, but over the year will be more than what I just bought it for. And if you look, guys, this is why it's important to also do the wheel. Well, you don't have to, but okay. If I go to my wheels, go to my Cypher, okay, my cost basis, right? 1681. If you look at all the premiums since February 20th that I have started collecting on Cypher, my adjusted cost basis is 1191. I've collected lots and lots of premium. Okay. We've just been collecting premium on CSPs this whole time, and then I finally just bought some shares, placed a covered call, and lowered our cost basis again. Okay. If I sell my shares, okay, with all this premium, my profit is going to be about a 48% return on Cypher during this whole time. Okay. So this is the part where it's like, I didn't even buy the stock really until the most recent time. And if I sell it for 20, it's a 50% return. I'm good with that. Yeah. So the question was, guys, when do we do the CSP or covered call? What are the parameters? Open interest, delta. In the brokerage, we should look at question mark. For now, I'm choosing based on strike price and premium, but I believe there's still more. Yeah, so I'm not just picking the price because I like the premium. What we are looking at is mainly delta is going to be your main drug of choice when it comes to picking a strike, along with the Bollinger Band. Okay, so Cipher, the one we just did. Okay, so first things first, you look at Cipher's chart. Okay, you can look at the weekly to understand your top max. Okay, is about 21 is about the max. Okay, then again, daily, we're at the top of the band, so that's good because that's going to say there's a little bit of resistance, right? We've hit the top. I don't want to set covered calls when we're at the bottom because there's so much room for the stock to run up, right? If I set a covered call at 12 and try to set a strike at the 16, that's not going to get me a lot of premium. But if I wait till the top and then look for a 30 delta, we'll catch a little bit more upside and get more premium. So we can look at the weekly, see the best case scenario, really 21. Could it squeeze past like Nibius? Yes, but this is what we use as guidelines. We like to use our Bollinger Bands. Do you have the chart set up, AK, with Bollinger Bands on yours? Okay, perfect. And then when you go inside your option chain, I don't know what brokerage do you use? I can show you guys on 2 different brokerages. Okay, well, simple. I've never used them. I know it's a popular one outside of, I think, the US, but I don't know inside. So, but we'll take a look. I'll look at 2 separate ones. Does your guys' option chain, when you guys click on things, look more like this? Or more something like Robinhood's? Okay, perfect. Alrighty. Perfect. Alrighty. So what I look at when we go to sell a CSP or covered call, they're both the same. Okay. We pick our date, which is going to be a 3rd Friday of every month. So April 17th, but that's a weekly, so I'm not doing that. So 45 days or less. 60 is my max, by far my max. There has to be a pretty good reason why I'm doing a 60. And then it's the 3rd Friday, so May 15th is the next one. Then I'm looking at a 30 delta. Oh, I'll do covered call because I'm on Cipher. We're at the top of the band. So here's a 30 delta, right? 34 delta. This is a 34% chance, is how people use the delta, that this is going to get called away. Okay. This is a 29% chance. So it's up to you at this point right here. This is slightly 5% likely, more likely, right, that this will get called away. And then you can look at your premium difference and be like, okay, is that, you're right, like, do I want to take that 5% chance, right? Where's the top of the Bollinger Band on the weekly? 21. So you could do the 21. I don't have a negative delta. Oh, on puts it will be. Yes, on puts. Yes, it'll be just the same thing, a negative 30 delta. But yeah, so covered call is just the likelihood of happening. So if we're at the top of the band and then we go to where a 30 delta is, it usually happens to be kind of where those weekly or daily, one of them, they're going to line up pretty well, is right here. So then you're just kind of picking your likelihood. Do I want a little bit more premium and want it to get called away more likely? Do I want it to be less likely? So 30 is our default, okay? Like always look where the 30 delta is, okay? And then like For Nibius, right, it's gone way past the Bollinger Band. So if you wanted to play it more risky and do like a 40 delta, right, more likely to be assigned heavier premium, you can do that, right? When something is overextended already, you can play it where it's like, give me some more premium because I don't think you have much more room to go up, right, on a covered call basis. Same thing, but flip the roles for CSPs. So we like to keep the same rules when it comes to covered calls and CSPs. You're just playing the opposite buying or selling portion. Okay. And then safe is like a 20 delta. So it'd be like setting a 23. Okay. I prefer companies with an implied volatility over 60. So SoFi is just over 60. So SoFi is like the safest company I technically wheel with at this moment. But you can get really juicy premiums for this, but just obviously know that a company can swing heavily in a bear market, bull market with these higher implied volatilities. So more likely to move past strikes. Okay. Does that answer your question? There's nothing really. I mean, I want a tight spread, right? This is a 4-cent spread. So expiration date, yeah, 60 is my max. 45 to 45 is really what I like to cap everything. Implied volatility 60 or more. So it's just this is determines the higher it is, the juicier the premiums are. Obviously, the more risky the stock can be. Right. So when it's a more risky stock, more volatile stock, they're going to pay you more in premium because it can move a lot, right? SoFi doesn't move a whole lot as far as dropping 30%, 20%, up 30, 20%. It doesn't do that, right? Cypher can have a 20% day. The next day could also have a negative 15% day, right? The volatility can be pretty insane. So, yeah, I want implied volatility over 60. My delta is default is 30, 20 is safe, 40 is the risky, just more likely to be assigned, right? And then I want I just want good open interest and volume. There's nothing specific about it that I'm looking for. I just want to see that there is activity. And what really is more important than the volume and open interest is the spread. Okay. This is a 4-cent spread. That's amazing. Okay. Now, if I go to May 22nd and look at that 20, okay, it is now about a 30-cent spread. I don't want 30-cent spreads. Okay, I want tighter the spreads, the better. More activity is happening. Okay, those are really what I look for, which typically you're going to find the tight spreads. So that's why like PGY is a little tough sometimes. Depends on the day. Let's see, there's not too much activity. But if I do same thing, sell put, here's a 35 delta. So 10-cent spread, not bad. Not tons of activity, but not bad. Okay. But same thing, sell put, 30 days out. Okay. Then I'm looking 35 delta, 25 delta, up to you on if you want more likely to be assigned, less likely to be assigned. Where's the bottom of the band? Stuff like that. Does that make sense? Does anybody have questions? Welcome in, Dave. Is anybody confused about options in general? Because it's come to my attention that right now the community is heavy based on options. Okay. I'm not typically, well, I do options a lot, but I typically like to actually buy a lot of shares too. But with the uncertainty in the market, I don't really love buying out tons of shares right now. The question is, what do we look for in IV when we buy calls and leaps? Well, okay, it's a mixed bag. because implied volatility, higher the implied volatility typically becomes more bullish than a lower implied volatility. But right now, really what I'm looking for is I want the VIX to drop. Okay. When the VIX is above, I don't know, 25 roughly, even close to it, even with the uncertainty in the market right now, the VIX is causing the increase in premiums. Okay. So the reason we're getting paid so much right now on premiums for selling options is because the VIX is high. Okay. We don't make as much on the CSPs or covered calls typically when the VIX is low and there's no uncertainty in the world, right? We're still making good money. I'm not saying we're not making good money, but we get to make more money when the implied volatility and the VIX is higher. Just because people are uncertain, they want to pay for insurance. We're the insurance company. Okay, so we should thrive in one of these markets. So I am not currently buying leaps because the IV, the implied volatility, is going to crush your premiums and quickly drop it. If I am looking at buying any leaps, I would be looking for January 2028 just to play it safe, leave the uncertainty out there. But we're making so much money on the wheeling right now that I have not been doing this, but I did think about buying some SoFi leaps, that's for sure. But I prefer the VIX to be a little bit more calm. I don't even know what it's at right now, to be honest. What's it at? VIX 19. Well, and you can see bottom of the band. So what are we going to do? We're going to go ahead and bounce right off of it. Yep. I think this is going to be, like I said, I think it's going to be kind of our final leg down. Everything that you wish you bought last week for last week's results, don't mess up. Don't do that again, right? When did you buy those leaps? Yeah, the lower IV, the less you're paying in premium to own that company as far as buying options, right? That's why when we're selling options, we want a high IV because the premiums are juicier. But if you're buying options and it's a high IV, well, if you're making money selling it, right, you're making more for selling that option. Well, somebody's got to pay more to buy that option. So when the implied volatility is high, you're paying a premium when you're buying options. But if you're selling options like we are, you're collecting that juicier premium. So yeah, I prefer a calmer implied volatility, calmer market in general, less uncertainty in the market. If the war ended this weekend, I would buy leaps. Truly over. What's going on? Welcome in. I saw that you said in the options chat that you followed the Cypher covered call play. Good job. Best time to buy leaps below 18 on the VIX is what I studied. Yep. But over 25 is like really crushed. Yeah. Yep. Okay. SoFi near 21. Honestly, I still think that you'll be okay with your 2027 leaps for SoFi. I have never done it, but you can sell covered calls against your leaps, but I've never done it. You can do it. I do have an understanding of it. It's what they call a poor man's covered call, but I have never done it. Yeah, you can run a CC against it. Damien, am I doing anything fun today? Yeah, I'm doing a live stream. I'm having a blast. Come on. All right, so we got tons of alerts, guys. So again, alerts. Okay, bullishness is happening. Okay, inside of bullish moment, right? We have macro uncertainties. Always fun to juggle. Okay. Cypher, for example, got the weekly diamond. We knew going into the weekend, war talks, bearishness, things can happen. Okay. you can still, try to put it, people like to jump on the diamonds right away. I prefer to jump on the diamonds the following day. Okay, so for example, right, we get a weekly diamond on Friday. Well, let's start with daily diamonds. We get a daily diamond on a Wednesday or Thursday, okay, or Wednesday. You want to buy it on Thursday, right? At night, you want to look at the chart, see it, see where we're at, see what's kind of going on, right? We'll go with, let me go to the cipher chart. Let me just show you what I mean by this, okay? Okay. You get alerted that night. Typically, let me go to the candle version because it'll give me the accurate data. Okay. This closed. Where is it? Sorry. Let me find an example here. Was that an actual diamond up there? It was. So, okay, we look at Palantir yellow diamond layer on the weekly, but then stocks below. Yeah. So macros will always wipe out this right here. Yep. Mm-hmm. Let me go to my other one, sorry. So, just so you guys know how the diamonds come in, right? That little tag flicked green right here. Okay. There's a few things I still look at, guys. Diamond. This MACD really is nowhere close to like crossing, right? Take a look at SoFi. See how we're just like slowly moving, slowly building. This is crossing. Okay. Now if we go to Palantir, let's take a look at all the other things too. Okay. When this came out, where was it? Here. Volume is still increasing. Okay. So personally, okay, there's two ways to think about this. Okay. One, macros, Palantirs. I'm not interested in Palantir, but as you can see, it's had this massive run up. You also, where's your downside? Let's see where that 200 weekly weighted moving average is. 90. Okay. Risk reward. Got to know your risk reward. Okay. Weekly. Okay. We sold a lot of Palantir along the way. You've sold many times, right? 160, 188, I don't know, 180. Okay. Then you dollar cost average down maybe somewhere around, well, you got alerted that week, so then you buy it the following week. So somewhere, we'll just say 150. Okay. So you still bought it $30 less than what you currently just sold some at. Okay. Weeklies aren't going to populate very many times. You're only going to probably get one more weekly on Palantir. Okay. Remember, these aren't all in diamonds, but they are to help you dollar cost average in, dollar cost average out. I don't ever buy one diamond and that's my like total position. Okay. So for me, again, risk reward. Remember your 200 weekly weighted moving average. Okay. I'm saying Palantir is probably going to 90. Why? Because here's your 200 weekly. Okay. So for me, one, I wouldn't have been, I'm not trading Palantir, so I wasn't looking at this at the time. Lost it, came up, clearly rejected our line. Once we lost it, rejected it. But no, if you did dollar cost average, why it failed? I'm assuming macros came out March 16th. Well, let's go look at the other mag 7s and see March 16th real quick. Amazon's had bullish news, so they've been fighting the current. But what about Meta or Nvidia? March 16th. Yeah, same thing. They dropped the past 2 days. I think Mag 7s in general started dropping those 2 days, right? Yeah, for sure. Boom, back to 2 weeks. Palantir. So what I'll say is, if I look, I'm not sure I haven't done the back test on it. Let's see. Once it loads. Hold on. Why is it not loading? I'm trying to get the back test strategy for you guys. Yeah, I mean, the strategy, if you guys, I don't want to put it in a weird way, but ultimately, the mindset's always long term. It's always dollar cost averaging. It's the same way with Archer, right? I own some at 9. I'm waiting on the next weekly diamond, and then I'll dollar cost average in again. Okay. So not every diamond's going to be the diamond that sends it along its way, right? So which one did we just deal with that just took off? Ella, I don't want to hear a comment out of you, okay? You just stay over there in your corner, okay? But here's 3, right? Buys, sure, it went up. It just was gray, right? Buys, and then you're probably like, Colby, why the heck does it keep telling me to buy and nothing's happening, okay? Well, if you just give it a minute, it'll do something. Portion at a time. Yep. So, in the classroom, I think I have it typed out. But what I like to do, and what the strategy, if this freaking would load. Well, yes. Basically, how I do it, okay, is green diamonds it's always a rolling total. So, for example, okay, if you have $1,000, we'll just say a yellow on a green, okay, 10%. So that's $100, right? So you bought $100 of it. So now you have $900 left, okay? Typically for me, I ignore gray candles. Ignore. You can do a CSP if you want, but I ignore them because they're risky. So I would probably just end up realistically having this 10% unless you're super bullish on the company. You can follow it, but I typically ignore them. So, but just for diamonds purposes, 10%, 10%, 10%. So if I only have $900 left to put in this company, I'm putting $90 more. Now I only have $810. So now I'm putting $81 into this company. Okay, so 10% of whatever your total capital is you want into this company. Then green diamonds are going to be 25%. Okay, now if you follow inside of here, okay, there is the chill investing strategy diamond labels. Okay, it's going to populate the ones that are following the flow that have multiple things. This, okay, it does not buy when, well, it'll be, if I go to monthly, that'll be red. But when these are both red, it does not buy the diamonds. You have access to these if you want them, or you can just do this and it'll tell you. Okay. It just makes it a little pickier on what diamonds it's going to follow. Okay. But green diamonds are 25%. Weekly diamonds are double. I'd use them as double ups. Okay. So if I, was doing $1,000 position and then I was only with $500 left, this would be a double up diamond. So 25% would actually be 50%. So 50% of my 500 bucks would be $250 buy. 50% of my 250 bucks would be $125 worth of my buy. Okay. And then same thing, you can do 10% on the oranges and 25% on the reds. Does that make sense, Harry? Again, long-term investing mindset, like the company long-term, these are dollar cost average moments. Okay. The reason it doesn't show a diamond is because those diamonds populated on the weekly. So you can stay on the daily time frame if you want. And these buy labels will tell you when the weekly actually populated. Okay. And when you can buy. So if I go to the weekly time frame, you're going to see it. There's those two diamonds right there. It populated it. The buy labels on the daily time frame for you. Okay. It didn't follow this one because on October 3rd, this was red, the weekly was red, and the monthly, if I go to October, okay, October 1st, this flicked red as well. Okay. This is just a helpful hand of kind of catching other flows of bearishness and kind of like putting another restriction on it. That is the closest. This is what that back testing strategy. I don't know why it's not populating. Okay, Control V, maybe. Might have to just close my trading view real quick and reopen it. I do not own Microsoft. I do not own any Magnificent Sevens. I can't wheel them, so I don't play them. That's my thought process, but I think Microsoft is a great one to own at this time. It's very rare that it's under the 200 weekly weighted moving average. Well, Sat yeah. Archer. Archer is good to wheel, but it has been just in a downtrend. I've wheeled it in the past, made plenty of money on it. But unfortunately, it's just been carrying down. When it gets back to the 9s and 10s, you're going to have no problem wheeling it. So I don't think the wheels are bad. Archer? But Joby and Archer have both been taking hits. They're both significantly down. It's still a 2-cent spread. Spreads aren't bad. But if you're looking at the weeklies, then yeah, they're going to be bad. But that's all weeklies for the most part. But you don't have a whole lot of upside because the stock is so cheap. But that's going to be the case for any cheap stock. Okay, you are very limited. But even though you see that this is right, only 60 cents away, 60 cents is 10%. It's a 10% upside that it has to go. So it's harder when the company is super cheap because you think that it doesn't it's like, oh, it has to go 60 cents. Well, 60 cents is 10%. That's a pretty good swing to the upside, right? But you can still play super safe stuff and collect at least something if you want to. The $9.04. Collect something. But Sat L, yeah, it wasn't a wheel one. That one was just a buy, make some money one. Not all my companies have to be wheel, but if it's going to be a Microsoft or something, it's going to take way too much more capital. It's like OPTT. I was talking about that this weekend. I want to buy it. It's 36 cents. I can't wheel this. Okay, we got the strategy thing. Like, I can't wheel this. It's too cheap of a company, right? No options. Now, I just want to buy it because Endural, defense, cheap. It could be like a $500 into this could turn into thousands and thousands of dollars, right? It's a shot. It's a shot worth taking. A $500 worth it? I think so. right? They work with Enduro. It's based on ocean and sea defense, which is clearly what we're dealing with the Strait. So I think OPTT could be a good one for us to just own and just sit there and hold $500 worth. But yeah, I don't think when I get to my target on Archer, by the way, I think it'll just be one I'm selling and taking those gains. Because I do think that economic crash is definitely on the table in the longer term, as far as 2027 maybe. So we'll be taking our wins when that time comes, when we start seeing the same thing we saw in the SPY with the MACD crossing on the weekly time frame. We'll be exiting. Okay, we won't be doing covered calls. We'll take our exits. But Archer was definitely wheelable. It's definitely wheelable. Yeah, because the share price increases, right? A $10 stock versus a $5 stock. Instead of getting 60 cents, you're going to get $1.20. It's going to move. It's the same percentage. It's just your share price has gone up, right? So therefore your premiums have gone up, and therefore your cost basis has remained low. So the premium return on your capital is greater as it increases from your cost basis. Same way my premium right now, return on my capital is not great because I own them high. But I don't know if you guys looked at that chart that was uploaded, not by me. Well, I mean, I've done the same chart as far as my long-term target remains. Where is that? Charts, stock charts, Archer. He has more $4 worst case, I guess, and then but my target still remains this one too. I had 18. He's got 21. I'll take either one of those. you know. Um, so yeah, I think they're going to hit their stride, and I've just been accumulating. I was in this wave last time. 4 got out at 13. So I bought back in at 9 to start my position. I thought they were going to hit their stride a little sooner. Didn't happen. So now I'm waiting on the next DCA down, which will cut my cost average in half to about 650. And then I will go ahead. We will go to 18 and try to get that 300% return. So that's my thought process on Archer and where we currently sit on that position. Oh, well, it's kind of the same thing. I mean, you probably witnessed it with Nibius, right? The more it's gone up, the more your premiums have gotten kind of better, right? Because a 10% move on a $150 stock, right, is significantly more than a 10% move on a $5 stock. It just depends on how early you bought into that stock, where you now have like, did you buy it at 60 and now it's 150, right? Your cost basis is super low and the premiums just got super juicy, right? I lost my train of thought. Oh, back test. Yeah. Palantir. Now that this is functioning. Alrighty. So did this not buy? Huh. It didn't buy this weekly. The coding. Remember how it populates? Who was asking me that? Pat? Was it Pat? Yeah, Pat. Um, our strategy label didn't buy Palantir on that weekly. But you can see on Palantir, 36 trades, 100% win on those 36 wins, 100% average on your win rate. Yep. Yep. Um, so you guys have access to knowing whether or not this would buy it or not buy it. So you guys can basically just quickly reference, like, if you see a diamond populating, you can kind of see, be like, is this a buy one? You know, you can see. So you don't have to have that flow. Um, what's it called? Those flow indicators actually active for yourself. You can just see whether or not we would. Um, so it's just another little wall of protection. What else you guys got? What other questions? Again, I Microsoft, we can look over Microsoft, but it's under the 200 weighted weekly, and I would just assume that it's time to start accumulating. Yeah. Yep. Yep. Again, if you follow the diamonds in DCA, okay, you are going to see. I'll turn this off. Well, either way, because Microsoft for the longest time I don't think was very good, right? Yeah, I mean it was bear markets, 08s, you know, but still over long-term investing and trading, 116 wins and 10 losses. Your average win on 116 wins was 64. Your average loss was 13%. Okay. Any more questions? Next week, I am looking for CSPs. Um, probably some more CSPs, as you guys know, will probably be on SoFi. And ONDS, maybe. I kind of want, again, ONDS has not given us a diamond on a colored candle yet. Gray candle, and gray candle. Okay. I'm looking, and that's because it's downside, but I want to do some CSPs and try to accumulate in the 7-6 range. I think you. For me, I'm just waiting. I need to make sure I get my dollar cost average on Archer. So I'm just gonna wait for the weekly diamond to buy. Um, we can go take a look though. It'll all be different also when it gets red, or when we have a red Monday, most likely. Yeah, you could do the fives. It's going to drop red. You're most likely going to get them because I don't think 4 will be a juicy enough premium to put your capital to work. But if you can get 50 cents or higher on this 5, that'd put you right at the 450 range if you get to own it, which could be. I don't think it'll stay in this low 4s if it goes there for very long. But I'm going to just accumulate on the weekly time frame because I need to definitely lower my cost average and not risk missing that opportunity with my final 10% cash. Now, if I don't get my other shares Friday, which I think I will now, thank goodness. I was really nervous of not getting all my shares. Then, then I would do CSPs because I would have more cash. Navitas. Okay, and other people had questions also about, hey Kevin, Gladiator. Okay, we have a few traders in here, guys. Okay, now Gladiator puts out his own option trades. He doesn't use our indicator, and the reason I brought him in, okay, for the community is because I am not as active as a trader, right? I make my trades, I wait 30-ish days for the most part, right? Usually it's bulk, right? Things happen. And it can be boring to some people. And I like that it's boring. Um, but he trades more often than me. Okay. Um, if you go inside the Discord, okay, you are going to see my trades. Okay. And then you're going to see his little day trades in here. Okay. Intel puts, how much, so he puts out his trades. He does not put out when he exited. Okay. So manage it yourself, but he's showing you these ideas and he's good at them. Okay. And he does swing trades as well. So he bought some cipher leaps, or not leaps, 2 months out, which will probably be really good for us to buy, right? Next week with red. Okay. So he sees something clearly bullish that we also see with cipher, right? So all you would do is you see what his call outs are and go take a look at our indicator. If his call out and our indicator match, okay, then it's probably a play you can make. Now, if he says, place a out of the money option cipher, right, it's going to go up, and our indicator was saying to trim, I'm probably not going to take that trade, right? I want them to match. I want his call out to match what we also see on our indicator, and then it's probably a good idea to take that trade idea and put it into action, okay? That's what that's for. It's meant to be more of like an idea, like option potential. Like he bought out of the money Palantir calls for 3 months out. He knows Mr. President pushing it, right? So you can wait for positive momentum to flip for us on Palantir before you buy them. But again, he's not going to tell you when to get out. So if you are up and you see like, oh, I just made 25% in a day, 2 days, whatever, that manage it yourself. But he's giving out these ideas right here, and you just kind of pair it with our indicator, and whoa, hello. That's how that kind of works. Yeah, so community trades also, and I'll get to you, AK. I'm starting to, like I said, I can't be as active, right, as trading, but clearly there has been interest in Miguel's trades that he's putting out there or doing, and people wanting to just kind of know what he's doing. Again, he's not full time. This is just as of right now, Miguel. I haven't added another one. I have asked another community member. They are not 100% confident in their plays or their strategy quite yet. So we'll see if they want to be part of it. Again, this is Miguel. Miguel uses our indicator, diamonds, momentum elite, right? He likes his companies. So he's putting out his trades. Again, do not have to follow. Okay, these are community members that use the chill indicators to pull off some amazing trades. Follow your own risks, never follow blind, right? So whether or not you want to follow Miguel or are interested in Miguel or any of these community members that eventually join our team, that is, up to you. It's just kind of throwing out some more ideas. Again, you have mine if you want to follow. Some people don't want to follow any alerts. They want to learn, right? You learn and then you apply it yourself. That's 100% good to you. I don't feel pressured to make trades for anybody. I am making trades for my own portfolio, and all I'm doing is documenting. That's what Miguel's doing. Miguel's just trying to grow his own portfolio, and he's just, hey, this is what I just placed to grow my own portfolio, right? Up to you whether or not you're interested in that play as well. So that's really what it was for. So yeah. Hopefully that answered you, Elwa. So hold on. AK. How can we guess the best price when a diamond generated? For example, Microsoft in a weekly chart, diamond generated on April 14th. Hold on. Microsoft. Okay. And the price is around 360. Okay. When I hover near the diamond and when I hover near the bar at the same day, April 14th, price is around 370. So what is the best price to pick for long-term buy? AK, I don't know if I understand your question. If you can word it better, AK, or if someone else can help me understand, I'd appreciate that. Um, and Dave, yes, boring is great. I prefer the boring side of it for sure. I don't like being stressed out about money making. No, we did not get a weekly diamond yet. That's why I was a little confused also. Oh, the previous year? Okay. Was that also April 14th? Oh, snap. That threw me off. And I'm like, Monday will be April 13th. Okay. So previous year. For example, Microsoft in the weekly chart, diamond generated on April 14th and the price is around 360. When I hover near the diamond and when I hover near the bar on the same day, April 14th, price is around 370. So what is the best price to pick for long term? So the diamond just generates at the bottom of the candle. And then so like the buy diamonds just generate at the bottom of the candles, right? Buy diamonds, buy diamonds. Okay? And then sell diamonds generate at the top of the candles. That's not saying that's where the price is, it just generates there in general. AK, does that make sense? So the sell ones are always gonna be at the top. Buy diamonds will always be at the bottom of the candle. That's not saying the price. That is just saying that's where momentum has crossed over to bullish. See how this momentum elite calculator on April 14th populated to positive momentum? Okay? That's all that is triggering this diamond. Positive momentum. Then a couple weeks later, you can see your MACD also cross bullish. Okay? And all you're looking for is that diamond, okay? And really, the goal is to be able to just see the diamond, be notified, and hit the buy button, okay? If you do that and just follow the diamonds, right? Just buy the diamonds, no, like whatever it puts the alert out at Friday at the end of closed, okay? It said 380.64 maybe. Hold on, let me go to candles. What's this candle? So close was 367.78. Okay. So that's Friday close. Then you would have opened it Monday open, right? So open was 362.82. That's what you would have bought it for. That's how the back testing works, okay? So the candle closes the following day at open, you buy it. Okay? Again, here's your back test. 91% win rate. You don't have to, if you want to try to time it and get better entries and everything and switch to this smaller time frame, right? Okay, I got a weekly diamond. Let's go to the 4-hour chart and see if we can time a better dip. Sure. But this takes that whole thing out of the equation, okay? This is not doing that. This is only buying it strictly based off of the strategy, okay? You got a 90% win rate on the strategy on Microsoft for a lifetime that it's been in. Hold on. Update, make sure it's still the same. Okay, 93% win rate for the lifetime that Microsoft has been. And all it's doing is buying whatever the diamond says. It's not trying to find a better gap. It's not trying to do any of this. It's just saying, okay, I'll buy some now. Next buy diamond, I'll buy a little more here. And it's doing the same thing where it's following basically add is 1 share, buy is 2 shares. A trim is 1 share, a sell is 2 shares, right? It's just doing the same thing where 10%, 20%, 10%, 20%. It's following the same method, okay, of long-term investing, trimming, and selling. This doesn't include collecting some wheel premium or anything like that. So if you want to, you can follow it blind. That was kind of the whole point of kind of creating it, is I wanted to make it where if you want to get more advanced and try to become a better trader and try to get better entries and better sells than waiting for the diamonds, you can, right? You can learn how diamonds populate, which using the Momentum Elite, you can see when a diamond is going to populate soon and look for an entry. Or you can wait for the diamond, follow it, buy it, wait till the diamond populates and sell it, right? And you don't have to really look at it every day. All you got to do is wait for, at the end of the night, maybe see if a diamond popped up, and the next day you know you need to do something. That was kind of the whole point, is to try to make investing boring. All you got to do is kind of find the companies that you like to invest in, and then you can just kind of follow the diamonds. Yeah. So inside, the question was, how do you understand Heikinashi candles? Okay. They are really easy compared to traditional candles. Okay. Inside the classroom right here, you're going to go to classroom. There's a Heikinashi candles, and here's your little photo. Okay. Bullish candles, all the base of the candle is at the bottom. Okay. Bearish candles, the base is at the top. Okay. Reversal candles, when you start seeing a shift happening, the base of the candle is in the middle. Okay. So we can go to a few charts and just kind of go over it. Sounds good, Elwa. I appreciate it. If you have any questions or anything or ideas, let me know. Only trying to make it better. I feed off of your guys' ideas and try to implement. So keep it up. All right, so Heikinashi candles. Okay. What do we see here, right? Let me pull up the classroom again and make it smaller. Good. Okay. Discord. Okay, so bullish candles, right? All of it is at the base. See how the wick is the only thing on top? Wick on top, bullish. The wick is starting to show a little bit more. And back to bullish, showing a little bit more, right? But we're keeping this bullish happening. Now we constantly keep getting reversals, okay? Then there was a spike, reversals, bearish, reversals, a little bit more bullish, a bigger wick on top, bearish, bearish, okay? Reversal coming in. Sure enough, we get a spike up, more bullish, okay? Reverse, bearish, 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 kind of trying to reverse, bearish. Now here's more of a reversal candle coming into play, okay? So there's only 3 candles you really need to know. Right here, okay? What a bullish candle looks like, bearish candle, and what a reversal candle can look like, which is going to be when this starts taking more place in the middle, right there. All right. Like I said, guys, there is, I want to add more to the community. We are getting close, but we just need to get to 10 more members. We will be adding flow bots and dark pool bots inside the community. You guys, I don't think, should be able to see these quite yet, but I haven't gotten them yet. I want to add them for us. which will help us with more kind of call outs as far as maybe a company we should be looking into. Okay. That's kind of what I want, is more things to keep eyes on. If we get a diamond and we see a weird order flow, then we will be able to know we should jump on that one. Right now I'm looking at weekly just because I'm, waiting on weekly diamonds. But if you are like ASTS, right, we're above this blue line heavily. I'm just focusing on the daily. But you can see reversal diamonds or reversal candles constantly, and you get this reversal kind of happening. Okay. But weekly diamonds are definitely easier because there's more data inside of one candle. So it's definitely easier to read than constant changes based on daily noise. But you can see when what's it called? Like this diamond, right, populating on a big reversal candle. You see how this is a reversal candle and it's telling you to sell? Probably a good idea to sell because this candle probably ended somewhere in this range. So again, big reversal candle, probably a good one to sell. Bearish one mostly means the day was bearish, so you probably could wait a day maybe and get a bigger, like slightly tick up from a recovery from a big red day. But big reversal candles, probably a good idea to start looking at exitings. Okay. But weeklies are always easier to read, way less noise, more time, everything like that. So if you just want to invest and catch big moves and not worry about all the daily stuff, just only look at weekly. Like, okay, only buy this, only sell this. You're going to get way less buys and way less sells, way less management of anything. You can just follow the weeklies. If you want to be more active, then you can do the strategy dailies, weeklies, flipping. Here's an example of those flow bots I'm showing you guys. Okay. So this is dark pool bots. Dave knows all about dark pool. QQQ, Core Weave. Again, they're not going to tell you what they're doing. This is why I'm not a huge fan of dark pool. They don't really tell you whether or not it's a sell or a buy, but there you go. And then this is the main one, is the order flow we're looking for. This is saying, okay, there are people buying meta calls at 565 for that expiration date. WFC, Adobe, CoreWeave, people are buying calls, NVIDIA calls, puts on light, puts on semiconductors, puts on Palantir, right? So if we saw, for whatever reason, right, we got a diamond. Well, we did get a diamond on CoreWeave. Okay, wherever it is. We got a diamond on CoreWeave, and they see some weird option activity. This was 2 days ago. But on CoreWeave, right, we could take action on that play because our indicators are matching up with some option flow that is weird. Okay. Call put above. Okay. So this is kind of what the game plan is to have. Okay. Or maybe you're like, oh man, I own Palantir. Should I get out? And you see a bunch of people loading up on puts, right? Probably going to have a little bit of a red moment coming up. More puts. Puts on Amazon. Puts on Tesla. SATS. So we're going to have this. Like I said, we just got to get to the members to unlock it. So I know there's questions as well for people on how to get paid to invite friends and family. That is in the Discord. If you have any issues with that, please let me know. If you go to the Discord under the Upgrade Now, there's an Earn Money tab. Okay. Become a partner, 10% reoccurring commission on every payment your referral makes. Share your custom link. So what you'll do is you're going to hit this partner up. I think it's easier on desktop than it is on your mobile version, but I don't think it really takes you to that. But if you're on the mobile version, you'll be able to go to like an affiliates tab over here. Hold on. It'll say like affiliates. Okay. And you'll see like a browse button. Maybe on the mobile version you see a browse button, but you'll say browse marketplace. You'll type in chill. Okay, it'll say become an affiliate. You'll click become an affiliate, but make sure it's on ours. Once you hit become an affiliate, it'll say view assets, hit view assets. And then these are your custom links. They have to use your custom link, otherwise WAP will not track it, and they do not let me change things for people. Okay? The reason they don't let me do that is because if I like this person more than this person that's bringing in business, right? They don't want me to be able to take the business away from this person and give it to this person. So it's there's pros and cons to it, right? I could help you out and assign a person to you, but if I was a jerk, right, I could take people away. Not that I would ever do that, but that's what they try to protect people from. So it's really cut and dry. The person has to use your link to sign up. Just copy this link, give it to them, and you will get paid 10% commission on whatever one they sign up for. Discord full access is Discord only, no indicators, no WAP, no classrooms, nothing. Just whatever's in the Discord. Trading view indicators only is only the trading view indicators. And to get everything, including classrooms and courses and everything like that, it's the investing membership. Okay. Well, Dave, just get some more. Okay. You're not done. I know you know more. But yeah, this is a way for especially you guys that have the Founders Club. All you need to do is invite 4 friends and family, right? You guys pay $20 a month. If you get 4 people at 10% of your 50, right? That's going to be $5 each month times your 4 is 20. WAP, now you're covered your membership by inviting 4 people who are part of it. Okay. So this is how you can ultimately have your membership covered and not pay anything. So I recommend. I'm working on, Dave, you weren't in there, and I'm not switching to a full website and everything, but I'm trying to see if I can upgrade our tools and make it a website, but I'm going to mainly not be on the website. I don't know how to explain it, but where is it? I'm working on it where option profit calculators and covered call calculators built into like a website helps you understand, if it's above $15, this is what plays out. If it's below 15, this is what will play out. So we're working on stuff like that on the backside as well. Risk level, cash secured puts, all that fun stuff. What other questions you guys got before you guys enjoy the rest of your weekend? Don't freak out tomorrow, okay? Don't freak out. Do not. What I took the past green days as is opportunity to take wins. I took it as a buffer, right? Think about it this way. Without those green days, if we just met for war and didn't have it go well, we would just go further down, right? This news didn't come out with, let me go to whatever, for example, Nibius, okay? This bad news didn't come out when the stock was 100 or 99, right? And then it would go to 80. No, it came out when it was 150, 140, and now it's going to come back down to 130. It's not the end of the world. Same thing goes. Okay? There you go. Up here. It's going to pull back. Guess what? That's okay. We didn't have this bad news happen at 11, and now we're sitting at 8, right? We've created a buffer with all this positive news to now have some bad news to generate another pullback. If this week happened and you guys were like, oh shit, I don't own enough of this company and it's going and now I missed out on everything. If you had that feeling inside of yourself and that conversation with yourself last week, and you're like, oh my God, I missed out. Okay. Well, don't miss out. Here's an opportunity. Make the adjustments that you said you should have made last week. Make them this week. You're given another opportunity. The market always gives you another opportunity. Don't waste it. Okay? Don't waste the opportunity. Okay? Because we have seen what happens with a slight glimpse of a war ending. Okay? Do you guys think this war will go on and on and on for years and years and years? Or do we think it's going to go on for another 2 weeks, right? Can you endure, if you bought right now, endure some pain for 2 weeks? If it kept going down, yeah, I think you'll be just fine. Don't invest money that you can't have or need to have for the next 2 weeks or a year, right? If you need the cash because you're buying a house in 6 months, don't invest that cash. Okay? Time is on your side. Of course, AK. No, but there is a website for a leaps calculator. What do you want to know? I'll show you. Is anyone else starting the an ETF portfolio as well, following me, or no? Everyone else is like, Colby, you're an idiot. It's fine if you think that. So it's called Option Profit Calculator. Steeler Dave. Long call you'd go to. Is there one you want me to plug in? Yeah, and Harry, so I was plugging in for my projections. So like $500 a month, okay, can get me to an annual dividend in the year 10. Just $500 a month to like just these ones, right? Separate premium every month. If you can make $500 or whatever it may be, $500 is less than the average car payment in the U.S., right? There's got to be a way. You got to find a way to put this consistent money aside, right? And then within 10 years, that's $30,000 a year you're paid out in dividends, okay? Which 30,000 is some people's base salary in life, okay? So make sure you kind of get a base salary. Now you don't have to work. You got a base salary, right? And then let's fast forward year 15, we're at 81,000. Okay? The compounding effect takes into place rapidly. Yes. Okay. This is based on the portfolio of these income ETFs: diversified gold, real estate, energy, NASDAQ, the Russell 2000, the S&P 500, NASDAQ, Ethereum, Bitcoin, and more NASDAQ. 3 different NASDAQs, all different purposes. Okay, so diversified through many, many different things. A few in the Bitcoin or in the crypto world. Okay. Got to have it. It pays a good yield. It's just a small portion. Gold, real estate, energy, right? Diversified. Some years are going to be good for some of the other ones. Some are going to be bad. But if you can kind of get the average out there, it'll be good. The compounding is really great. So my goal is to, like I said, take 10% of my premium every month. So at the end of the month, at the end of April, I'm building it. I have not put it out there, Dave. I'm making sure everything is calculating correctly. Like this is not. See how it says total invested 48. I just realized that. This says year one. It should be matching those. So I need to fix that. Once I get it all published and finished, it will be available to you guys. And then you can put your dividends. I'm waiting to see how I get paid out in dividends via Robinhood, and how it displays so I know what data. And then hopefully I can implement this data when you say, oh, I got paid 0.5 of a share. It like auto adds it to here. I know if I put dividends like $10 here, it automatically puts $10 worth of dividends I collected over time here, so I can track total income from it. But I want to see if I can add where I don't have to consistently say I bought this share, and it just auto does the math. So I'm trying to automate it a little bit more. For your long call, so you can do it. You would put your symbol here. So SoFi, get price. Select your option. So if you bought, somebody already put one in here. SoFi, I think 21 is what they bought, January 2027. Yeah, or maybe 20. Okay. And then you put the stock price range. So if the stock was 15 or 45, calculate. I'll answer that in just a sec. So then it automatically calculates that option, and you can see, okay, if by June 20th the stock got to 40, I would be at a 734% return. Is this what you're kind of looking for? Yeah, so options profit calculator is what you would go to .com. Okay, so yes, you do get paid interest on option collateral. So I don't know if it shows me on my computer. Maybe it does. I know it does on my phone. Oh, here it is. So yeah, cash earning interest includes option collateral. Interest earning is 3.35. I do not have that on my dividend calculator though. Does that make sense? I don't know if I answered your question though, Dave. I don't have it put on here. I think that'd be too much to track me. But you could just put the ticker as like a interest, I guess. Like put interest. Put interest. It'll put interest right here, and then all you got to do is type in, I got paid $10 in interest, and this will track all the interest that you made. So you could do that way. Oh, just on options, not on shares. Just option collateral. So it's all the cash they're holding while you don't know if you own the shares. And so it's only on CSPs, not on covered calls. So, do you guys like dividend stocks too much? I know I'm in a lot of growth companies, so they don't pay dividends. There's a guy who teaches the wheel strategy. He only basically does dividend stocks. No, no, they just pay a high yield on dividends. So no, but I'm not collecting interest on that. But he teaches the wheel strategy using dividend companies because if it hits a bear market, that the dividend company pays a dividend, and that's one income. Covered call or CSP is two incomes. Yeah, I think that's he just. But it's really boring stocks, and I don't like boring stocks. What else you guys got? Yeah, so there's a few out there. The question, there's a purpose for everything, right? There's growth, which is going to be growth, but in order to I guess pay yourself from that growth company, right, you have to sell the stock, pay taxes on that stock, and then you live with it, right? So you're depleting essentially your capital. Okay. With a dividend one, right, it pays you monthly, or this one does. Um, and I don't need to touch my capital. All my capital stays there. Yeah, there you go. My goal is to not have to. The thing is with I plan to do that kind of more with the retirement account, because the retirement account, I don't pay taxes on gains when I sell the growth, and then the dividends will be paid out tax free. So I won't pay any taxes on those dividends. So I'm okay with that. For me, I'm going to do the growth one or this because I need income monthly before I retire. Because I want to live off of it sooner. So for me to let growth happen over the next 10 years and then sell those, I'll have to pay, the 37 or whatever, the 20 something percent taxes on that. And then I'll have less capital to pay me in dividends. So technically it's better in a tax account to just start with the dividend one if it's a high paying dividend. Not talking about SCHD like a 3% dividend. That doesn't make sense. But with these ones, it makes sense to just start outright doing it if I'm going to live off of it before. But retirement wise, for me, I have them in growth and I will sell them at the end to then put them into dividends, like you're saying. Yeah, I know. I wish I could move south. We liked Atlanta. We had a blast. But we just have family here. So, um, yeah. Any plays, any questions you guys have? I think we're unlocking a lot of things that are going to help the community a lot. Um, I got to start finding a more balance in my schedule now that we kind of got things going. Um, but that's all. That's on me to figure out. I can't seem to catch up on sleep right now. I keep going to bed at like 3, 4 o'clock in the morning. Just like last night, I think it was like 3 or something. But if you guys have questions on any particular stocks you're holding or anything like that, we can go over. I'm going to end up owning a bunch, I think, as long as we stay red. But I'll own the 4,000 shares of SoFi. I'll probably get the 1,000 shares of IREN, 1,500 shares of HIMS. I have my covered calls on Oscar. We set. So I'm good with that. And again, I hate looking at like these because it's like I'm not down this, but I hate looking at it that way. But Eva, they like to display it that way to trick people into freaking out about it. Don't freak out. But we will be doing some CSPs this week for sure for May 15th. Of course, Dave. I'm here. My goal is to teach, and not hopefully have you guys follow blindly into that, because I know that gets people into trouble. I'd rather just teach what I'm looking at so that way you guys can put it into action. Again, if you guys know anybody that wants to, I have buddies that, I'll invest in a year, I'll invest next year. I'm like, okay, but like, just because you're going to start investing next year doesn't mean you shouldn't be learning it this year. Okay. So anyone that's like that, just let them know, like, this is a place to learn more than it is a place of just trading, to try to make yourself better, to understand things, how things work. So Miguel's in here. Okay. You're late. We're about to close off anyway. But if there's anything that you think we can make better or do better, or add into the community to add value, I appreciate it. I'm going to try to get better. I don't know if you guys saw, but there is now chart requests. You guys can upload. This is not for chatting. Okay. This is not for chatting. This is just plop your ticker down. Okay. And when I get a moment, I will upload them. They will be in stock charts. Okay. And you will be notified inside of the stock chat room. I'm sure that you've seen a few times now. A new stock chart uploaded. My dog is dreaming in the background. Precious. So you will see this when I upload a chart, as well as I will comment uploaded, responding to you. And then if I upload anything, if you guys ask questions as well in the student request section, okay, is there an effective way to manage cash per the VIX? Okay, when doing a CSP or CC, how do you decide the date? Okay, these questions, again, drop your question. Do not answer people's questions or anything. This is not a conversation platform for this stuff. I will upload some sort of classroom or video answering questions for students to learn from. Okay, so we're just going to build a student library basically full of questions here. Okay. Again, a message when something is uploaded will say a lesson has been uploaded to the classroom. So you'll be notified as well. Okay. If there's anything else like that, ideas wise that you guys have that can help? I know there's a lot now in here, and I feel like we're getting to the point where I'm gonna cap it. As far as like, I don't know. I think there's a lot. Oh, now you need, so let's go to it. Look at Kev hopping up in the chat room. What I would look for is probably this. I would probably stick to the monthly time frame. Once something has become a free fall, right? Just switch to the higher time frame. Okay. Like this is a free fall. This is the same way with like NVO, right? When NVO has been free falling for so long, just switch to the higher time frame. Because trust me, I don't care about grabbing this bottom because it just kept going, right? I'll buy it instead of buying it for the 70s or 60s. I'll buy it somewhere for 80s, 90s, just to know that we're done falling. As you can see, we don't get very many monthly candles. So when you do, it's usually a good time to at least buy some of it. So where do we think it's going to go? Is this? Okay, it's been out for a while. I'm just saying where the Fibonacci's land from start to finish. Well, you're pretty much landed based on bottom top. Fibonacci pullback is 87. We're at 83. Where's the monthly moving averages? You don't have a 200 monthly. Bought some at 81. Just yesterday. I mean, look, things are starting to pick up, but it's all going to come down to your AI software. Is AI Claude taking over software? Like, when I think about software, okay, or this company specifically, go do a product test, okay? ServiceNow engages in provision end-to-end workflow automation platform for digital businesses. Okay, what I take from that is that it is good at efficiency and scheduling. I don't know. That's what I take from that. Provision of end-to-end workflow, like a workflow. Like I do this, and this in my day, right? That's what I take from it. For a company specifically, like how everyone subscribed to Microsoft in the past for a business, for Microsoft Word, Excel, blah, blah, blah. They're subscribing to this to help generate workflow efficiency. But what I would say to that is like ask Gemini. And then you would just say, like, make me a Monday through Friday 9 to 5 work schedule for social media posting, right? You just type that in and it's going to go ahead and spit out a Monday through Friday work schedule. So this is the part of AI they are worried about, that now, or these software companies are going to lose their moats, right? Again, now might do more than just this, but this is what I take from that slight description. Of this is the fear that people have that Claude, Gemini, which Gemini, right, like, or Microsoft with Copilot, if Microsoft's already embedded and Google's already embedded in these businesses, and then they can turn into these workflow efficiency AI platforms. Well, somebody already uses Google and Gmail. They're probably just going to use Gemini or Copilot or whatever for them. So that's the hard part I have with the software companies. The same thing goes with Zeta. Okay. Everyone's asked me about Zeta. I don't own it. It is getting close to my attractive price of 13 that I've been saying that I think it's going to. And then I would have a hard time not trying to buy some probably. But Zeta is a marketing company. In my free time, not my free time, in my part-time job that I say I'm working when I can't do like a live stream maybe because I got called into a meeting, right? Yeah, we sold it at $23.75. So yeah, we've done a CSP on it, I think, anyway, we sold at $23.75 and got out, and everyone was like, Colby, you're an idiot. Zeta's going to 45. Sometimes I'm right, sometimes I'm wrong. I'm not perfect, okay? By any means. I'm just a normal human that believes. I work in the marketing field, okay? So when I look at marketing, just so you guys know, for these companies, these are the ones we use: Google and Meta. Meta can build me an ad. I can build a Meta ad within a couple seconds, and it performs great. Okay. So I use AI to find out my headlines, what appeals to people. So I use AI every day for building out advertisements. So I have a hard time believing Zeta. Like I said, if they can make $7 for every dollar somebody spends with them, I don't know why they don't have every company signed up with them. Yeah, Meta is a monster. Meta is definitely a monster. It's just an expensive monster. Do a stock split. Let people freaking afford your stock in a way that actually benefits everyone. That's what they need to do. If Mag 7s can all do a stock split, we'd all greatly appreciate it. I would buy it. But I want to run the wheel. So I don't want to wait till 1K. What are they at? I forget. 700? Well, I know they'll do it at 1K, but what's like, why? Why wait? It's still $100 stock. I don't want to do it. I like $50 stocks and less. Meta. Dude, we got all. Oh, Meta's the closest, I guess. Yeah. But still, do it now. Yeah, no, I'm good. I forgot where I was going with all of that, but for the most part, Kevin, you need AI storyline. This is it'll pass, but they need AI storyline of taking over all these companies to be done. Okay. And I do think there will be a restriction, I think, in the future, that AI can only be a certain percentage of your business, meaning of taking people's jobs. You will have to have a certain amount of people working efficiency based on, AI being a certain portion of that and not being all of that, when it's a major company. I think they will have to put a cap on that. And then I would say the AI debate to software is very similar to what HIMS has battled as far as GLP-1 news. As soon as they realize that HIMS is not just a GLP-1 company, and there's more to it, HIMS takes off, right? Same thing for software. AI is not going to replace it. Once they realize what more the software companies truly do that AI can't do, right? Or that those software companies can do with AI their own and make themselves better, then they'll continue to go. Which I think if you, it's GIV, right? Is the ETF for software? I think I have it saved. IGV, right here. Well, I have a lot of lines on this chart. So the software companies in general are just significantly down. So we have not been given a signal on software companies quite yet. But we are at a main support. We could go down another level. But IGV is software index. So if you guys, again, there's all these. I was trying to be like Damien and draw all these lines. There's ETF sectors, so you guys can follow each sector. This is going to be your software sector, IGV, energy, okay? And you can see what sectors are really have a drawdown, which sectors are clearly need to come down to about this 100-day that they like to retest maybe, right? So you can just look at sectors as a whole. Like, why isn't my healthcare exploding? Well, healthcare has been in a drawdown since, and now it looks like we might be seeing a reversal happening in healthcare. Right, we got a healthcare reversal Heikin-Ashi candle. We're on all of our moving averages, right? We could start seeing a reversal happen here for healthcare. So this kind of just helps me understand the sectors as a whole and how things are kind of going in our sectors. So financials bouncing off the 100, bounced off the 100 last April. So it looks like financials have found their bottom. Could we have a pullback from right now? Sure, but it looks like financials have found their bottom. So this is why I like to have all these sector ETFs available to just look at, so I can understand what sector I'm buying and is that sector, trending or downtrending. August, yeah, I would assume that everything's gonna float up by August. So it just depends on how out of the money or in the money that you did that strike. But I would say that I would assume that the whole market floats up by then. What growth ETF, Dave, do you do? Or is it just the 401k ones that you're talking about? Because I like SPMO the most, but it's definitely at its all-time high. Yeah, the 401k. If I had to pick an individual one to buy, it's SPMO. Besides like a standard QQQ, but like something separate is SPMO is probably my favorite growth one. Year to date, they're up 2.5%. QQQ is down 1.4%. All around one, FDVV is good for all around. I can go through all the ETFs, but any more questions? What you guys got? Suggestions, questions. Do you guys like when I upload other charts I also like or see on X inside of the chart stock charts? Okay. I can't look it up there, but we can look it up. Not populating for me. PFJZX. Thanks, Harry. Did What to look in the indicator to see when a green diamond will print? Oh, that's your question, Miguel? Yeah, I'll go over it. I don't know why all this is. Sorry, I'm fixing this. So it's okay, I'll look at it. PJFZX. I don't know why it's not populating. There it is. Jeez, please. Yep. Yeah, very similar. I think SPMO for 10 years, so 126. SPMO 5 years, 122. I don't know what the 10 years is. I guess 115. Oh, it came out then. Came out 10 years ago. So I guess in 10 years. 10 years, it's up 425%. Um, so this is a really good one. What it tracks is the top 100 S&P 500 momentum stocks. So for the past 2 years or 3 years, right, it's been like Palantir. It's been a top position it holds. So like, it's all based on momentum. But it's tough in 401ks. You're restricted to what you can hold. But this is a very good one for 401k for sure. If they didn't restrict you, it'd be a different story, right? But you're restricted a little bit to what you can pick. So, okay, so there's a couple ways. If you want to use the advanced way, Miguel, for diamond determination, okay, the advanced way is using the chill momentum 2 hour. I forget what the name is on the WAP. Let me pull it up. WAP, 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 WAP. The chill momentum 2 hour, daily, weekly, monthly. Okay. That is going to be the easiest one as far as to understand when a diamond is going to populate. This is the histogram. The green bars and yellow or orange, green bars and red bars. Okay. But when somebody asks, okay, like why did a diamond populate? Okay. Let's see if we can zoom in on one here. Let me close these because these don't help with the diamonds. Okay. So we want this white line on these to be as low as we can get to the green line. Okay. The lower it gets to the green line, the stronger the move can be to the upside. Okay. Just because, right, this white line doesn't have as far to go up when it's a yellow. So we look for this purple to cross over the white to generate a diamond. But the white line needs to be under a certain threshold, right? It can't be crossing When this like crossed above the white up here, no, this is where we still are overextended in a stock. It's not going to tell you to buy it. We want this white line to be heavily under this center, like below this halfway point, basically. We want it to be closest to the green. Okay. Now, what can happen is very similar to this. When someone asks, well, it didn't work. Okay. Well, diamond, momentum came up. Clearly, something happened. We hit a resistance, macros, whatever it may have been, right? It dropped down and then it went back up again. And that's why we got another diamond. Okay. Momentum fell through and then back up. That's why it triggered another one. The same thing, fell underneath, flashed red when this went under, and then popped back up to green and carried on. Okay. So now if we go to now, right? Came up, failed, came back down, trying to break it again. Okay. It has not crossed. It's touching, it's like wants to cross it. But this is the part where sometimes you can get a diamond, okay? Because it crossed over this white line, but the following week it went right back under that white line. Like it rejected it. But these lines can't always line up perfectly. This lined up perfectly where it rejected it before it crossed, right? But same thing can happen. I'm trying to think of the most recent one where it like showed it and I was like, don't do it. Hold on. Is it Iran? Cypher. So like, for example, Cypher got a diamond. If it rejects this momentum because of macros, whatever, and next week it could fall down and then the following 2 weeks come back up and go, right? So I'm trying to think of the most recent one where, or I guess Palantir, right? We just witnessed, you guys were asking about Palantir earlier. See, look, crossed. This is the week, Monday, March 16th. And then we had bearish macros come out or whatever, news, war, whatever, of Palantir, and it came back down. So it looked like we were going to break out, but we didn't. But it's still a good dollar cost average moment, like I've shown in the past for long term. Okay, momentum was building. It was worth the shot. Okay, get ready to do it again. Get ready to buy when momentum crosses. It only can fake out across so many times, right? Like NVO, for example, right? It was way extended underneath, so it came up, rejected, up, rejected. This is the part where when a company, for me, has been on a tremendous run like this, constantly just above on the monthly time frame, just constantly running, okay? At some point, this is going to have to, like, calm down. Like, you need to calm down, sir, right? So sometimes you need, this is why I always say look at the higher time frames first, because you need to understand, here's SoFi's monthly, right? It hasn't been like NVO, where NVO was just like hanging out up here for months and months and months all the time, right? SoFi hasn't even gotten to the red bar one time yet with this white line. SNDK. Didn't somebody have an order on that too? Look at white line just hanging out up here. Again, it's a company that's freshly to the market. But it's been on a hell of a run. Again, Miguel, early stages. Try to look for again, you can't even do that. You got to look on this weekly. I'd probably wait for this weekly MACD to like cross negative or the daily. I don't know what the daily's looking like. Go to the quicker one. Like I'd wait for this to cross negative and start showing a true like bearish. Yeah, the daily's still going up. So I think you just wait for that like crossover to actually show happening on the MACD. So then you can catch that downside. Company early on, I'm not touching it though. Because it could come out like wrongly valued from the start. I still wait 3 years for a company to trade. Did that make sense for you guys as far as this indicator? Okay. Like when momentum flips. This is why I like to pair it with a MACD. Like this momentum and this momentum, right? I like to see that it crosses here, and I like to see that the MACD is also crossing. Okay. Like you take a nibble, right? You buy some. MACD crosses. You can take another nibble, right? Another bullish thing crossed over. Okay. Bullish momentum crossed over. Go ahead and buy some more. Okay. SoFi weekly. We haven't had a cross. We don't have any green yet. But again, when it happens, this looks to be pairing. MACD curling. When's the last time the MACD was this low? Was back in 2022 when it was a new company. Even April didn't get this under overextended to the downside. So hey dog, wait, don't go anywhere. Your classroom question. I want to answer it while you're here. So I don't have to do anything later. Let's just get it over with. Your question was, when do CSPs and covered call, or when doing a CSP and covered call, how do you decide what date you pick? All right. So when I'm picking a date for a covered call in CSP, I just make it up. No, I'm just kidding. So what I do is I do 45 days or less, no more than 60. Okay. The goal is 45 days or less. And then monthlies, meaning the third Friday of every month. So April 17th is going to be the third Friday this month. May 15th is going to be the third Friday of next month. Okay. So I prefer those dates. I prefer the monthly dates. Now, when do I do other dates? Okay, let's say earnings for SoFi are May 14th. I'm probably not going to pick May 15th. I would probably pick May 8th, like the week before, maybe, or the week before that, right? I don't want to do a covered call or restrict my upside or anything like that when there is a potential catalyst, right? Maybe, I don't know what other companies you're in, but SoFi has earnings, like I said, or SoFi's launching a new product, or Nodo says there's something important happening next week. Sorry. Then I don't want to place any covered calls and CSPs over those dates. But default thinking is 30, 45 days, or I guess 24 to 45 days. I just say 45 days or less, but 45 days is my go-to default max. 60 days is by far the max that I'm willing to do. And it's the third Friday of every month, or on the option chain, it's just known as monthly expiration dates. Okay. And the way you can tell, really, and went over it a little earlier, but since you're in here, I'll go over it. What you want to see on those option chains is very little spread. Oops, I just refreshed as it just finished loading. Someone watching on YouTube later is going to be like, Colby, this is a long video. Okay, so when we go to the option chain, right, we're going to start with the sell put. Okay, and the third Friday, April 17th, so May 15th. So you can see, right, one expiration date, two expiration date, the third expiration date, the third Friday. Okay, and then you have June 18th, July 17th, August 21st, September 18th, October 16th, November 20th, and December 18th. These are all the monthly dates. The weeklies typically generate closer to these dates. But those are going to be all the dates. So there's 12 dates that we really like to trade for covered calls and CSPs. This is why I say you only really got to make 12 types of like trades per year. But what you want is when you look at these third Fridays, right, the spreads are typically really close. So here's 35 cents and the top is 37 cents. 2 cent spread, right? Very tight, good open interest, great open interest, right? That means a lot of interest is happening here. There's tons of volume, meaning people are buying and selling this a lot. So that's all good things we want. Now, if I go to April 24th and go to the 16, let's go take a look. Okay. There's 6,000 less volume. There's 45,000 less interest. Okay. The spread is still good. Still 2 cent spread. That's awesome. Okay. But there are some, like other companies, where, like here, a 20 cent, $20 one, the spread, right, is $1.75. That is no bueno. Okay. Now, the higher the implied volatility goes, okay, the more, like, there could be a 10 cent spread, a 20 cent spread, but really the bigger the spread, just know the more, like, harder it is to liquidate into, like, close your option early, because the spread is so big that it can range randomly in a day whether or not the stock moves in your favor. So that's why you want a tight spread. Does that all make sense? Oh, big stretch. Awesome, dog. Glad you stopped in. Yeah, I mean, sometimes, but that spread on that $20 one could definitely be 30 cents or 20.50 or whatever it was. Yeah, it'll be slightly different, but the spreads will still be fairly large on these. So I just always want to make sure you default your settings to being at the midpoint on here. Okay, make sure midpoint. That way it doesn't default. Basically, if you do an ask price or a bid price, okay, depending on which kind of contract you're doing, it defaults to like the getting filled quickly and paying either all the money or getting paid the least amount of money. So at least default to mid, because if you just put the order in at a mid price, at least you got the mid, right? You got a decent price. Where if you have it at the natural price, which is what they want, that's why it's their default setting, is they get to profit off of every transaction you make extra, right? If you said the ask price is $1.07, but the mid is like 105, Robinhood basically just scooped that 2 cents from you. Yeah. So whenever you are trying to open a CSP or covered call, the goal is to get as much premium as you can. So you want the higher premium that you can collect. So if it says that I can get 23 to 26, my goal is to get as close as I can on a CSP to 26, or a covered call. My goal would be to get as much premium as I can. When I close a position, the goal is to get back as least money as I can. So I want to put the lowest price I possibly can get filled. Robinhood makes it easy, because if I did this, right, and I'm trying to do a CSP, okay, it says 95. Well, let me do 96. Oh, typically it would say like medium fill, low fill. If I did like 90, it would say high fill, because it's most likely to get filled. So your goal is to get, when you're opening a position, to get as high of a number you can, but it also says medium fill. If you say low fill, you need the stock to really move. It's not going to get filled right away. So you want as high as you can when you're opening a price, but still say medium fill to get it filled quickly. But yeah. Anything else? Any more suggestions? Dog, there's so much happening inside the Discord. I appreciate your guys' support. We need 10 new members to unlock the next feature inside the Discord. So hopefully we can achieve that sooner than later, because I would love to have that part of the community. Yeah. Any more questions? Unless Miguel wants to make a donation. Yeah, come on, dog. Get some pups up in here. Miguel. Get your freaking all your new X followers to get in this Discord. What's going on? Dog, I went over it, getting your custom links as well in this video, so you can refer back to that. Um, again, get paid to invite people, get paid to get people in here. Again, what I want to also refer to is Gladiator makes trades. He does not tell you when to exit. He does not manage accounts. He does not answer questions. But if you do see something that he puts out there and you see that the indicator also is saying the same thing, like he's saying put a put on Intel, if our indicator also shows, hey, it's probably a good time to get out or start, selling Intel and it's going to be going down soon, then you should probably follow the trade, right? If our indicator said, hey, it's a good time to buy Intel, and he's saying we should place a put, I probably wouldn't do it. Our stories don't align, right? But it's just to put more trade ideas out there. The same thing, Miguel has trades. Do you have to follow Miguel's trades? No. But I made sure that for community members that they put what they're doing and their thought process behind it. So when you go look at the chart, you see what his thought process is. Does it match with you? Does it match with the indicator? Miguel uses the indicator, so it should match with the indicator fairly well. So this is more ideas. Again, I'm not as active as far as trading every day, right? I'm analyzing, I'm looking at things, I'm placing a CSP, then I don't got to think about that CSP at the latest date of 30 days from now, right? Anything can just fluctuate, but as far as being active, I don't really need to be actively trading constantly, right? If you guys like grow the account, get your account going, right? And over time, the compounding of your wheel strategy is going to take charge. And if we take a look, whenever I get to my dashboard, right? For March, I did 16,000. Okay. Then compounding for April, if I get all these shares or don't get shares right, my total premium is 20,000. As of right now, I'm already at 7,000 for May. May hasn't even started yet, but I'm making money in May. Okay. So this is the part where I don't have to, because in 30 days from now, I'm going to be making all the money. And then we're going to get assigned these shares and I'm going to set covered calls. And then we're going to start selling our shares. Okay. It's just a process, the wheel, right? So this is just passively doing it. Wait 30 days, wait 20 days, 45 days, 60 days for things to happen. Which I know is not for everyone, but when everyone's like, hey, are you buying this? Are you buying this? I'm like, did the indicator tell us to buy? If it didn't, then no, right? I'm not buying it right now. I'm not trying to time the bottom, not trying to catch the bottom little, oh, it hit that, I'm buying it. I'm not trying to do that. Like I can't pinch pennies. If I worry about the pennies every time, guys, you're going to miss out more than you make. Okay. Someone just said something in the chat. Well, we're here to help. Everyone's here to help, so that's what's awesome about this. Miggy's gonna put out some bangers soon. Yep. Yeah, Miguel's been on fire right now, guys. Again, he's been using the indicator. He was, I think, probably the first member of the community. So he's gone through all my versions of the indicators that I built over time. And he's just learned how to use them, learned how to read them, learned the momentum elite indicator. If you just learn the momentum elite indicator, you really don't need the master elite one, but the master elite helps you do all the technical analysis on the chart without having to do it yourself. So that is a good thing. But if you can learn the momentum elite indicator, then you guys will be perfectly fine how to dollar cost average and buy companies during good times. So not go chasing companies. And Dog, welcome. You got your first covered call. You popped your covered call cherry. I like it. What's up, Huey? As far as February goes, guys, these were rolls. You can see my roll. I lost $10,000 on my roll. Didn't lose $10,000, but it's it counts as a loss until I pick it all back up. So But you got your first covered call. And you're going to see how those work come Monday as long as it's red. Because you're going to be able to collect pretty much all your premium probably on Cypher. But we'll let it all play out. Yeah, it does get addicting, Miguel. We're going to make some money. And this is the part where I say, like, when you start really doing the strategy, guys, sounds good, Doug. When you start doing the strategy, you're going to have a hard time really wondering if you want red days or do you want green days. And the reason is you're not going to care. Either way, you're making money. Once you get your full wheel started, guys, you don't care, right? So for me, right, the stock market goes down, I have covered calls on IRN. I'll make this money, okay? Whatever this money is, I don't even know. So I made $2.30, 5 shares. So I'll make $1,000 in premium for the stock going down. I'll make another $2,000 for Oscar for going down or not getting to 17, whatever it may be. Okay. We'll make another $1,000 or something on Cypher for the stock market going down. So like we'll make money whether or not the stocks go up, and we'll get to buy shares at discounts, or we'll make money if the stock market. Either way, we make money, I guess, is what all I'm saying. So you'll be fine with your account because you'll just realize that if it's a green day, you're making money on your strikes, your covered calls, your CSPs. If it's a red day, you're still making money on your covered calls, and you're making potential more money getting new opportunities with CSPs. There's money to be made on each end, but you got to get the wheel starting somewhere. So in the beginning, it might feel slow, but again, you're going to feel like you wake up and you see a red day and you're like, sweet, CSPs. Green day, sweet, covered calls. It's like there's something to do either day, and you don't have to be wrong, right? Like all the trades that we set up are winning trades. For example, like if Cypher went higher than 20, it went higher. Did I lose on my trade? No. I still made premium and I sold my stock for a gain, right? There's still money to be made everywhere. And then you get to put that money capital into another trade. There'll be another red day. Like there's always another red day, guys. So any questions? Anyone excited? Anyone? Welcome in, Huey, again. I think I already said it, but my mind is going crazy. I know you have access to the indicator. I know you asked tons of times about, do I think this is a good idea? What do I think? And again, we've talked about it. All you got to do, dude, is wait for diamonds on companies that you like. Okay. If you do that, and because if someone asks me, should I buy this? All I'm going to do is refer to the indicator, right? So I think it was Celsius, right? Or something. I forget which one. Oh, you're talking about Nibius. Before. Where is Nibius? There it is. Okay. We've had times where it said to buy, right? Buy. You could buy here. Okay. Gray candle, light pink, can trim here. Again, you would have been fine trimming here. Are you going to time the top? No. It's not going to time the top. So if you're trying to time the top, that's a little tougher of a game to play. All right. I'm not trying to time the top, but you don't know if that's the top. The following day, it could have gone higher, right? Same thing. Sell Friday, it might be the top. Don't know. But I can wait for momentum to tell me whether or not it's the top and we're going to go down, right? Or I know you're not there yet, but if it was a cheaper stock for Nibius, if you were contemplating selling, all you would do is set a covered call, right? And say, I am willing to sell it, but I want to sell it for maybe 160, right? And then you're going to make money if it goes down, and if it goes up, you made more money. And then people get greedy. This is the part where you guys got to control your emotions, okay? because you said you were already contemplating selling it for 149, and then you signed a contract saying I'll sell it for 160. So clearly, if you're already okay somewhat selling it here, and you're definitely okay selling it here, and then it goes past 160, 170, 180, right? Got to control your emotions. Got to. Because if you roll it out too far because you want to catch all this upside, right? Same thing. Someone probably did a covered call, rolled it way out, right? And then all of a sudden they're like, man, I wish I would have let it go because I would have sold it at 120 or whatever, right? And picked it back up for 80. But instead, because I rolled it, I have to hold it through this whole time and I don't get to buy it for cheaper because I didn't sell. So, again, just let things play out the way they're meant to play out. It'll work out. Don't turn a winning trade into a losing trade by doing that. The FOMO is a real thing. If you need to be talked off a ledge about FOMO, just reach out to me, reach out to the chat. Because I don't want you guys FOMOing. It's how you get people get stuck. Yeah, so like just bought outright, Dave? Or done like a CSP to buy them back? Yeah, so this is the fun part, guys. We'll do it right now. Think about this, Dave. Okay? I don't know what's we'll stay on SoFi. Okay. So let's say I do 33 days. Don't worry about the May 15th. Just think 33 days in advance, okay? So 33 days in advance, I say I will sell SoFi for 18. Okay? They're going to pay me 65 cents. Or let me actually do at the money. Let's just pretend at the money. So I said I'm going to do a covered call at 16, okay? And let's just imagine, okay? $1.45 they paid me. So really, what did I sell the stock for? I sold the stock for $17.45, right? 16 plus my premium on a covered call. So I really sold it for $17.45. Okay, shares are gone. Now I need to try to buy the stock back. Okay? Well, let's sell a put 33 days out for 16. Okay? What just happened? I just bought the stock and sold the stock for the same price, yet I collected $1.45 when I sold it, right, to the upside, and now when I buy it, I'm collecting another $1.17 to the downside. I'm collecting the premium, right? So another dollar. So I bought and sold the company for the same price, but I made $2.62 in premium to do that. So I still bettered my situation, even buying the stock for the same price I sold it for. Does that make sense? Yeah, you can buy it for the same price and sell it for the same price, and you'll still make more money because that $1.45 moved your strike from 16 to technically 17.45, and now your 16 buy is actually creating a 14.45 buy, and you get to own it, right, better. So you still created that cushion and gap and everything like that. So yes, I do that all the time. Yeah, same. So here it is. Step one, cash secured put, right? Then we move on over to waiting. Okay. If I don't get assigned those shares, let's go back. Step number one. Okay. If I got assigned those shares, let's move on to step number two. Let's sell some covered calls. Okay. Get called away, right? They sold my shares. Guess what? Back to step number one. If I didn't get my covered calls and my shares didn't get called away and I still have them, guess what? Back to number two. Just do another covered call. Make sense? Some people, like we just did, you can just, if you're like, for example, how far do you get out on covered? How far do you go out? Same thing. 30 days, 45 days, no more than 60 days. Same rules. Same rules, Kev. Same rules as a cash secured put I do for covered calls. So when you're on the chart, okay, and you got your Bollinger Bands on there, okay, I want to make sure covered calls, we're on the top half of the band, okay? Then I look 30 days out, 45 days out, whatever the monthly expiration date is, May 15th, June 18th, July 16th, whatever those ones are. Okay, 30 days, 45 days, no more than 60. And then I do the 30 delta. Okay. But for example, why am I not doing SoFi covered calls? Because we are on the bottom half of the band. If we got up here to 1950, $20 basically, up here somewhere, we could start thinking about doing some covered calls on SoFi. But I'm not doing covered calls right now on SoFi because we're down here. It's not worth it to me. I'm not willing to sell the stock for 19. I want the stock to get to 19, and then I want to set covered calls for 22, 23, 24, somewhere in there. Okay? So when stock is at the bottom half of the band, CSPs. Top half of the band, covered calls. Okay? To know where the bottom, like the bear band and the bull band, you look at the weekly. Okay. So if I look at the weekly time frame for SoFi, the bottom of the band still right here, right at this 15 mark. Okay. Top of the band, 33. The band is still up here at 33 and it's creeping up. It's widening. Okay. So there's a lot of upside potential with SoFi. Okay. Now when we look at Nibius, that just had a huge run up. Okay. What do we see? It's past the top of the weekly band. Covered calls, something. Could it continue running? Absolutely. But if you're wheeling and dealing, guys, and making some premiums, this is when you would do it. Set covered calls. You're extended outside of the band. It's most likely going to snap, right? Outside of the band, and it snaps back in within 30 days, you'll collect all your premium, right? We want the band to snap it back. So, top half of the band, covered calls, bottom half of the band, cash secured puts. Okay. They do the opposites or opposite settings basically. So cash secured puts, bottom band, red day, 30 delta. Top half of the band is covered calls, green day, opposite, right? Red day on the bottom, green days on the top. They're just the opposite settings. Okay. And 30 delta. So if we're looking at setting covered calls 30 days out, May 15th, 30 delta on calls. What is happening here? Sell call. Oh. Okay. Selling a call 30 delta, I'd roughly be doing if it was at the top half of the band, let's just picture it. Okay. 33 delta, I'd be looking to set covered calls at 18, 19. Okay? Somewhere in here, we'd be looking at setting covered calls. Does that make sense, Kevin? Again, no more than 60 days. So I'm not looking out at June. I'm really looking at May 15th right now. Once June trickles closer to 45, like if this was June at 47, then we can start thinking about doing some June covered calls and CSPs. But until it's under that 60 mark, it's not even a question for me. And the reason behind it is theta decay. Okay. Theta decay, theta, is how much you get paid per day. So theta is, like you collect, let's just say $1 worth of premium. Okay. Theta, for every day that goes by, they're going to pay you 2 cents, right? So we get paid 2 cents. So theta kicks in and starts really decaying this premium, which is paying us, when it's 45 days or less. That's why you want it to be 45 days. So if I go, let's see, this is 2 cents. So let's go, this is the 17. Okay, let's go to July. And let's go look at the theta on 17. There. 0.0114. Okay. It's eating away slower at the premium payout. We don't want that. We want a higher theta because it will eat away faster. You know, when you guys buy options, right? Yeah, theta decays over the weekend. So that's why we did the covered call. We got the weekend to eat away at that covered call, and we're going to have a drop on Friday, on Monday, right? We got all of the things working for us. When you guys buy options, like you're buying those leaps or long calls, or like Kevin, you did on now, all right? This theta is, you know, like the stock stays flat maybe for a week, 2 weeks, but your premium is like you're down 8%, 9%, 10%, and you're like, but the stock hasn't moved. But that's because they charge you this theta price every day that you own the option. So no matter what, it's slowly eating away at your potential of winning because the stock has just stayed flat. Does that make sense, Kevin? Does that make sense to everybody? Do you guys know what like a per diem is on your guys' like loans? Some people only understand that sometimes when I explain it that way, so I don't know. Yeah, buying calls on Fridays, I mean, it depends if it's like a long one, right? Like if it's further out, the a year out, 2 years out, the weekends aren't going to matter because the theta decay is going to be like tenth of a tenth. 0.0038, right? Very little decay because there's so much time, right? But when you're closer dates, like August, right, it's 0.009 for SoFi. This is not now, but in general. But the closer the date, the theta kicks in, and therefore, yeah, I wouldn't let the weekend eat away at your options. But this is why we do 45 days or less when we sell options, is because the theta decay is what pays us faster. And that's why we choose those dates. So if you pick one that's 66 days, 80 days out, it's going to decay, but it's going to take this. The stock needs to move more than the time needs to go by. Huey, you got any questions? Strategy questions? I like that you took your 95% gain. There's no problem taking gains, especially when you're trying to grow your account early on. It is important to kind of flip quick. People follow the long investor on X, okay? I follow the long investor on X. I like his charts. I like some of the stocks he's picked. Do I follow his trades specifically? No. I just like his content, right? But he gives people buy alerts in his community, and he's called the long investor for a reason. He holds for a very long period of time. The problem is with his strategy is that the average Joe like us can't hold for that long and grow their portfolio fast enough, right? The reason he can hold for a very long amounts of time is he has, I think, 10,000, 15,000 subscribers, all paying, right, monthly, which generates him roughly $500,000 a month. Guess what? He can hold through whatever downturn he wants and not let you guys know to sell anything, right? Not feasible for a lot of portfolios. So I don't know where I was going with that, but yeah, you got to flip your products. Especially if you wanted to start wheeling more. You definitely got to stick to the lower strike price products like SoFi and like that. I don't know. I said in the beginning of this episode, guys, that I'm very confident in my fact that I will probably be buying a lot more SoFi, and I think it might be a stock that I'm willing to be 50% of my portfolio in. For me. Doesn't have to be you guys. I'm just saying where I'm probably going with it. I don't know what it is right now, but I know it's not. No, it would be probably tied with my top holdings. It would not be a top holding. All right, what else you guys got?
before we get out of here. I know we've been on here now for 3 hours. I just love you guys so much. Huey, do you know about the community upgrade that we're trying to get to? Yeah, we have. We're trying to get flow bots and dark pool bots added that will shout out um, like somebody bought Amazon 255 strike for January 2027. They bought 200 contracts. That's roughly 500. They basically did $500,000 buy on Amazon 2 days ago. This will come out live. This was 2 days ago, obviously, because the market was open. This was Friday. People placing some Tesla puts, some NVIDIA calls. So this is just option flow activity that is substantial that you might want to focus on. Now, if it's a company, right, the goal is to pair it with something that you believe in. So, for example, Miguel recently just did a Microsoft play. Well, there is also somebody with about a $500,000 play being put onto Microsoft as well. Our chart on the weekly time frame is pretty close for Microsoft to get a diamond. So that is something that you could potentially be interested in playing. So this will help us out to basically give you ideas on, if you saw the alert come by and you're like, oh, I've been waiting to buy this company. Let me go take a look. Oh, okay, the chart looks good too. We're about to get the diamond or the momentum elite or the MACD is all about to flip bullish. I should go ahead and hop in this play. Just it gets more ideas and flows going to try to pair well with our indicators. So if I can get more call outs, right, on stocks and then have our indicator confirm the momentum is trending that way or going in that way, we can go ahead and hop on those plays as well and make money. That's the game plan. We need 10 new members. Welcome in, Arsh. We're just talking about those new bots we're trying to get. We need 10 new members. Full members, not free members. Right? Welcome in. You have the membership, Kevin. But the membership, right? You're signed up for it. But new membership activation is the $49.99 monthly, right? You guys are founding members. You guys are locked in at your price. Not going to change as long as you don't cancel. If you cancel and then try to come back, there's no getting your old pricing back. But new membership is $49.99. I've looked up as well. If you take a look, okay, so like, first of all, I haven't done the breakdown yet, but I do want to look. If you were to go to like Unusual Whales to get Superflow dashboard, whatever it is, where's the dark pool data? So like these same things, they charge $75 a month just to have kind of that information. Now we're gonna have that information. We're gonna have traders. We have our indicators, trade alerts, bot alerts, flow alerts, dark pool alerts, charts, classroom teaching, right? And all that for new members coming in is going to be the $49.99. So you can have all of that and more for less than what it would cost just to get those kind of dark flow bots and everything like that. So, and you don't have to pay for a TradingView subscription for our indicators, which saves you money also. So it's definitely a lot cheaper just to have our membership and get all the benefits from it. Huey, we can talk. I don't, what part of options, like I want to help. There are people in here that are nervous about options and I want to help. I don't know what you need help with if the questions aren't asked or an example or scenario is not brought up to my attention for me to help. Um, if no questions are asked, I just assume everybody's happy and nobody has questions. Okay. The same way, like you guys might be like, "Hey, Colby, why aren't we getting any new charts uploaded?" Well, I don't know what chart you want uploaded, right? So put a ticker. Okay. When I get a moment, I will upload it. Okay. But don't go obviously spamming 50 different tickers. I'm not going to do that. I will just delete your message. Um, but go ahead. I don't care. Two, three, something reasonable. Um, and I will get to them. Does by two or three, I just mean like you can drop two today, maybe one tomorrow, stuff like that. And I'll get to it. If you have questions, student requests, again, put your request. This is not a conversation room. Just go ahead and drop your question scenario, and then I can go ahead and upgrade and post them into our classroom, and start creating an educational like classroom in here for people to just dig through. Okay. And then we'll upload charts. And I'm going to start, since people like it, is when I find charts that I like and I believe in also on things, how things can play out. Same thing on Archer is I've been accumulating. I've been waiting for the moment to buy our next final load, which he believes could be 4. Okay. And if that happens, okay, cool. No problem. I don't care if I own at 9 either, because he still has a target of 21. I have a target of 18. He has a target of 21. Either way, I'm happy. Um, so I will make sure to include some of these sometimes into charts as well. Okay. Let's see what else you guys had questions about. Um, no worries. You don't have to create X. There's so much fake news on X too. It's kind of like hard. I don't even like, I'm starting to kind of go away from it. I have my few that I follow, and that's the extent of my X news. Um, um, yeah, definitely want to know what we can improve on and upload. Um, Arsh, I think you're aware of us trying to get the members to get those flow bots. I know you brought them up initially to us, and I've had it on my to do list. So I have the rooms ready, but need those members to in order to activate it. So I'm ready to go. Okay. Um, yeah, so Huey, if you have questions specifically on options, again, for me, Huey, what I did, um, I had a separate account for learning these strategies. Create a paper account, paper trading, do it while you're doing your actual trading, right? So that way you can see how it works, how to learn it, how to do it. That's a great question. I don't know the answer to that. Well, you know what? Let's just best paper trading platforms. I don't. You use Wealth Simple, right? Or who do you use? Looks like Webull has a paper trade simulator. I think they're actually pretty good. Um, I think also TradingView has it, but I don't know if it's the free version of TradingView. Moo has it. Like I said, Webull has it. Looks like TradeStation has it. Schwab has it. A lot of companies have it. Let me see. Wealth Simple have paper. No, it does not offer. TradingView, Charles Schwab, Webull, Interactive Broker. Gotcha. So TradingView doesn't allow the paper trade on options. So probably Webull, I think, would be the best one. And it's apparently modern interface similar to Wealthsimple. See you, Dave. Yeah. Yeah. Just I think that's going to be the best way for you to understand how things move, work, how things play out. I didn't do it with a paper account. I did it with an actual account. I started with 7,500 bucks and learned how to wheel with that and learned my strategies. I failed with it, made money with it. I didn't care. It was meant for me to learn. And I knew and I understood the basics of the wheel strategy to understand that it is ultimately buying and selling stocks. That is all it is. It is, I think, safer than actually just buying and selling stocks. And I think that it is more efficient. I don't know how to explain it. I think it's a better way than just buying and holding and selling. I feel like my thing's out of focus. Maybe not. I see you, Arsh. I don't know about a VIP chat, Arsh. I don't know about that. I wasn't a huge fan of. Maybe when we get bigger, we might change up the chat room. But we don't have enough people really chatting in order to do that. Because initially, I think we were going to do the same thing where you create individual chat rooms for each stock, but there wasn't enough people talking about each stock in order to like keep the conversations flowing. So we're not there yet. Um, yeah, but that's fine for paper trading. That's fine. It's fine to have the delay. It's not a big deal. Your goal is to really understand how things move, um, based on the stock moving and learning. So that's okay. Don't pay for the premium. Just do whatever one it feels right as far as the platform, easy to use, and option chains. I don't think, and Robinhood hasn't released paper trading yet. What else you guys got? Questions, suggestions? Not going to answer that question. Have a good one, Huey. Enjoy your rest of your weekend. Don't be ready for Monday. You still got cash, so get ready to buy. How are things going, Kev? Have you started doing any of the wheel plays? I know you're still learning, so no. Yeah, Intel puts should be good. Any puts should probably be good Monday morning. Any covered calls will be good. See you, Miguel. Yeah, it's hard to think about that. Yeah, if you're not willing to sell any shares for a certain price, definitely don't do it then. Definitely don't do it. That's rule number one. You got to be willing to sell them. And I mean, you could just do a portion. You don't always have to do all your shares. You can always do a portion. Probably when I get assigned all my SoFi shares, I'll probably be wheeling half of them and letting the other half go to a higher price. But I probably will wheel half of them. I still need to generate monthly income. So I will probably be wheeling half. So, all right, guys. I appreciate you guys logging on. I'm going to head out. I'm going to go ahead and go play some basketball, get active, get outside. But if you guys have questions, suggestions, guys, please let me know. My goal is to make it the best community possible, most educational, with a great team and great community members. So, again, if you want to get paid to invite people, let me know. There is a partnership program, so you guys can get custom links and get paid to invite. Awesome, Kev. Have a good weekend. Did you get your custom link, Arsh? Or not yet? Awesome. As long as you got your custom link. Perfect. Yeah, just we got to get 10 people, and then we'll get those bull flow bots and or the flow bots and the dark pool bots in here. And then you can be the next flow god. Awesome. Alrighty, guys. Have a good one.